Lots of news, of course, around XRP and ETFs and all of that. And of course, today we're going to break it down with a special guest that I think you guys will like to talk about the current markets, where they might be going, and also some of the strategies for big investment overall. My name is Paul Barrow. Welcome back into TechPath. Before we get started, I do want to thank our sponsor, and that is Coinbase. If you guys are brand new to crypto, or maybe your first trade, you're getting ready to start, just jump over to Coinbase.com. You guys can, of course, enjoy the future of money with the most trusted place in crypto for both businesses and people. All you have to do is use our link. We always leave one down in the comments, so you guys can use that, get $200 toward your crypto trades, and get going. Maybe this will be your first stop. Today, I want to kind of bring in someone we've been talking about. We've played many clips of him on our show, and of course, that is Matt Hougan coming in from Bitwise. Great to have you, Matt.
Thanks for having me. I'm so excited to be here.
Yeah, finally we have you instead of a clip of you that we're usually referencing. So this will be good. We got the live, we got the real world, Matt, as they say, going out there. So a couple of news items I want to hit on. And before we get into some of these topics, Matt, I want to kind of just get your temperature on how the ETFs are overall doing when you look at both ETH as well as Bitcoin in general, from not only traditional investment, but also maybe just in general, how the markets are perceiving these ETFs. What are you guys seeing?
Yeah, well, I think it's great to call those two out. I mean, look, my position, and I come from an ETF background, right? Before I moved to Bitwise 7 years ago, I ran ETF.com. So this is my home turf. These are among the most successful ETF launches of all time. I mean, the Bitcoin ETFs are the most successful of all time. They've pulled in $18.5 billion in assets. That's 3 to 4 times over the previous record for the fastest growing new ETFs. So it's a grand slam. On the ETH side, you've seen a more nuanced story because you had a lot of money coming out of the Grayscale product. But if you look at the new ETPs, they're doing exceptionally well. I know BlackRock's is over $1 billion. Here at Bitwise, we're $250 million. Those are among the most successful ETF launches this year. So I think whichever way you look at it, these are a grand slam success. And the key thing I want people to know is that in ETF land, typically the first year is the weakest year. Usually the second year is bigger than the first, and the third is bigger than the second, and the fourth is bigger than the third. So this is a down payment, and it's a really big down payment. And I think actually they're going exceptionally well.
Well, it's interesting timing when the markets are as they are, which is somewhat volatile, but you also look at a lot of, I think, beachheads that are starting to be approached. And you look at regulatory, we've already started to see a lot of movement in that space. Now we're going to be looking from a political landscape, possibly some clarity there. And I think also just the awareness of what's happening in the investment markets, to where investors are finally waking up and saying, hey, this is a real asset. It's not going away. And we're here for the long term. So I would agree with you. You guys had some news out here, Bitwise filing to convert 3 futures-based ETFs to your new Trendwise strategy. Explain what you guys are doing with that real quickly for our audience.
Yeah, absolutely. A lot of people, before we had spot ETFs, a bunch of firms filed to offer future-based ETFs, and we were one of them. But once you have spot ETFs, those are more efficient than futures-based ETFs. So what do you do? I obviously can't speak beyond what's in the filing, but what the filing shows is we're converting those strategies to rotate between, let's say, Bitcoin and treasuries. So if the market is in a positive momentum period where Bitcoin's price is rising and the 10-day moving average is above the 20, they'll be in Bitcoin. And otherwise, they'll be in treasuries if the market is falling. I would just say, momentum is the most established factor in all asset classes, in stocks, in bonds, in real estate, in commodities, and indeed in crypto. There's a big academic literature on that. And so we're just trying to offer a new strategy that captures that momentum aspect for people who are worried about those big pullbacks in crypto, which, quite honestly, is a lot of us. So I think this idea is to rotate out when the markets are in that position.
It'll be interesting to see this because we see it a lot in the crypto investors that watch our shows. They have kind of that built into their portfolio right now. So it'll be good to see structured capital kind of coming into this range. I want to hit on the point of the news this week, of course, just yesterday, I believe it was, you guys going into officially filing for an XRP ETF, more around just the topic of why XRP as the next ETF, because many people are looking at all kinds of different assets, especially in the digital sphere. Why XRP?
Yeah, absolutely. Again, can't talk to the specific filing, but can talk to XRP in general. First, I think you've probably heard me say this. We're in the ETF era of crypto. So I think they're
Right.
going to be ETFs on a wide variety of ETPs. XRP specifically, it has a very vibrant community. It's been around for many years and sustained that community. It has a novel consensus approach that's been working at low inflation rates, and it has interesting and evolving use cases. My general view on crypto, like I'm an index investor at heart, right? I come from the sort of index investing side. My general view is we are still in the early stages of crypto, and no one knows exactly how it will play out. And so we want to offer investors access to a wide variety of assets. XRP is one with a strong community and a strong track record and a strong history. There are people with positive views. There are people with negative views. We understand that, but just if we can structure a low cost, secure way to access that, we think that's an improvement for the market.
Well, and you look at just the news that has been going on with Ripple and XRP beyond the SEC, scenario, really what they've done from a technology standpoint, but also from a strategy standpoint, a lot of things happening right now. So that's a big kudo for them.
I think that's right. And I think people overlook that. They forget that these established platforms have very smart business development people that are working every day to find new applications. And whether you're talking about, rolling out stablecoins or partnership with leading financial firms, there is a lot to point to on the business development side in terms of what's going on in the XRP or Ripple community. And I think maybe it doesn't get fully reported. So we're excited about that.
Yeah. Well, I mean, we report on it quite a bit. There has been just a slew of news coming out prior to the Swell event. I imagine there will be a lot of announcements next week, I think it is, when XRP and Ripple are here in Miami talking about the next step for them, including stablecoins, all sorts of things that are happening. I was looking at the Bitwise website here, and I was looking at some of the weighted investments that you guys have in the holdings. And Bitcoin, Ethereum, Solana, most of these are expected, but XRP holding in right there at 1.8, which is significantly higher than a lot of these other really blue chip assets in digital assets. Why do you think we're seeing institutional more interested, I guess, in XRP? It's an interesting point that it's the number 4 position right there within you guys.
Yeah, I know. If you sort of abstract out and think about crypto big picture, it's introducing two things into the world. It's introducing sort of public money and permissionless finance, and
Right.
it's introducing public compute and smart contracts. And those are both really big breakthroughs. And XRP is interesting in that it has aspects of the public money side and also increasingly access of these sort of smart contracting style applications. I know it's not fully there, but it offers a legitimate shot on goal on those two big new introductions. And I think that's the reason it's been a sustained asset. And that's the reason you see the market capitalization, which is, of course, the reason that you see it high up the list, right? It's been around and it's had staying power. I would note there are a lot of crypto assets that have been around and are no longer in that position on the list, right? Some of the OG crypto assets, they all haven't sustained that interest to this day. And XRP is one that has, right?
Yeah.
More so than other assets you might point to.
Well, and I look at it from an investor standpoint, diversity, and really taking a look at your balancing of the portfolios these days. We talk to a lot of fund managers, both for retail capital, but also in some of the professional spaces. And one of the things that I'm hearing more and more from those fund managers is they're looking at the diversity that they can get into these ETFs that are kind of a little bit of everything. Are you finding that to be the case right now? Because you've got Bitcoin, you've got Ethereum, potentially we get an XRP ETF. There's a lot of opportunities out here. What are you finding the investors kind of doing?
I think that's exactly right. The funny thing about crypto is it's one of the only markets where people are still primarily focused on single exposures. If you look at the equity market or you look at the bond market, no one's buying one stock. They're buying a basket of stocks. No one's buying one bond. They're buying an ETF of bonds. Our view is that the same is going to be true in the crypto market. As you move from primarily retail to primary institutional capital, they're going to want diversified exposure. That's the way institutions invest. That's what they're taught in school. That's what they're taught in their careers. And that's a dominant paradigm. So I think you're going to see more of these diversified exposures, more of people wanting to make a bet on crypto and not make a bet on, Bitcoin individually or Ethereum individually. Let's just make a bet that crypto and public blockchains are going to be more important in 10 years than they are today. That's a bet I have very high confidence in. And the way you would express that is a diversified portfolio.
Well, that's, it's kind of the mantra of our channel. We talk so much we talk Bitcoin. We'll get into a lot of the blue chip altcoins. We get into the Web3 gaming space quite a bit, mainly because that very point is the diversity of not only the asset class, but also the potential opportunity within all these sectors to grow based on all sorts of variations. I mean, you've got things from a global standpoint that are impacting many of these, all that. So I think you guys are on the right track. I wanted to get your opinion on something. This was Eleanor Tarrant coming over Fox Business. And she made some statements here that I thought were interesting around this. The SEC, of course, has not filed its Form C with the Second Circuit. This is in reference to the appeal. So they need to do this pretty fast so Ripple kind of knows how to proceed. They also have 14 days from today to file a cross appeal if they choose to do so. I'm just kind of curious, do you think that we could see a scenario, because this seems like a little bit of a chess match right now between the SEC and Ripple. Do you think that maybe the SEC could just simply say, we're going to drop this appeal?
Oh, wow. That would be interesting. I mean, of course, anything is possible, and I'm not a legal expert. We'd have to talk to my general counsel. My view is that the SEC seems to be moving down the pathway of appealing this, but we will see. At the end of the day, what I'm focused on from a legal perspective is that, crypto has done exceptionally well when challenged by the SEC in court on major cases. I think Ripple is probably the most well-known example of that, but there have been multiple instances where the courts have found that the SEC has overstepped and that the arguments the crypto industry has made are maybe more sound than are purported in the mainstream media. They have a very good track record in court. I think that's the case here. And so I don't know on this no appeal story, but I think Ripple has made real progress in court against the SEC, and I think they should feel good marching forward on that.
Listen, Judge Torres is probably going to have a field day, I think, with this one on what we've seen, and we've reported on this and covered this, done deep dives on this pretty extensively. It'll be an interesting round of legal, I guess, hoops that we'll be dealing with for a little while. So it's going to be one to watch. I was looking at a tweet you put out. We need I think you're right on this. I think we do need this. A poly market on a stablecoin AUM topping 1 trillion by the end of 2026, Matt. That's just 2 years. That's 2 years away, man. A trillion? Come on, give us.
I thought about putting end of 2025, but I wanted to be conservative. Wow. Look, I think there's a major unlock coming in the stablecoin market. Stablecoins are a killer app of crypto. They've gone, from $0 to $150 billion without regulatory clarity. If you listen to Congress, the thing they agree on most in crypto on the Democrat and Republican side of the aisle is stablecoin legislation. I think the U.S. wants stablecoins. It's a way to export the dollar. It's a way to sell more treasury debt. It's a way to improve finance. Big finance wants to get into stablecoins. They're looking at Tether making more money than Goldman Sachs and saying, hold on, we want a piece of this pie. Mm-hmm. So if you have Wall Street, crypto, and Congress all aligned, I have a very high confidence that we're going to see breakthrough stablecoin legislation early in the new congressional season. And if we do that, I think it's Katie bar the door. I think it's Bank of New York. I think it's JP Morgan. I think it's Visa. I think it's every major. And so I think $1 trillion in 2 years is probably conservative. Conservative, right? Yeah. There's $10 trillion in money market funds. Stablecoins are going to be a better version of that. There's so much dollar deposit. And that's just in the US. You go globally and you can access dollars. I think $1 trillion is easy. So I would take the pro side of that poly market if it opened and if the regulators let me invest in poly market.
I like I like your betting style there, Matt. So I'm kind of in with you now that you've convinced me on this. I think you might be right. You look at the migration though. A couple of things are happening in the stablecoin markets in general. Tether, of course, you mentioned. Coinbase is going to be delisting non-compliant stablecoins coming up in Europe as the MiCA deadline comes up. This is the end of the year. Most likely that Tether will not necessarily hit the mark around a lot of these scenarios, especially within some of these exchanges. When you look at Tether and you look at what's happening with USDC Circle, I mean, what's the potential here of us seeing a major, landfall, so to speak, windfall, I should say, for Tether, or excuse me, for Circle, especially into 2025, to your point? Do you think once we get regulation that maybe that's when Circle really gets a little bit of move on the ball?
Yeah, I think that will help. I think that headline you showed from Europe is an example of that kind of unlock. I think as more regulated players want to interact with stablecoins as opposed to unregulated players, that biases towards Circle. I also think Circle is going to face more competition from traditional firms getting into the space, from PayPal marching into the space, from Revolut marching into the space. Mm-hmm. But I'm very bullish on USDC and its future. I also think that the level of sort of competitive moat in the stablecoin space is probably going to get a lot smaller as we get more regulation. Regulation substitutes for trust. And so you can see new entities gain scale really fast. And I think you could see a flippening in the stablecoin space. Look, I don't think Tether is going away. Incredible business, incredible footprint, particularly overseas. But do I think USDC will gain share? Yes. Do I think regulated stablecoins will become the dominant player? Yes. Is there a history in the crypto market of seeing that shift from unregulated venues to regulated venues? Absolutely. Look at where trading takes place, right? So I think we're going to see that same migration in the stablecoin space. I'm very bullish on Circle and on its competitors on the more regulated side of stablecoins.
Yeah, well, you've got a lot of things happening with PayPal, of course, with their own stablecoin. You've got, of course, Ripple coming into the game. It looks like we'll get that announcement soon. And then you think about just the strategies of, we haven't even seen the banks really come into this yet. So it's very possible we could see some real moves there. So I would agree with you that there's going to be a large influx. And to your point, it's kind of the killer app of where blockchain is going. Speaking of that, killer apps, we always cover the gaming space, the innovation in Web3, what we're seeing in real world assets. A lot of it's happening overseas. I'm looking at your top 10 holdings right here, which I would kind of consider, I would call this almost like the gaming portfolio. Let me kind of zoom in on that for everybody that's watching right there. You got Shopify, Meta in there, Roblox is in there, Unity Software, and a few others. Why not some of these blockchain Web3 projects in here? There's a lot to be looking at on the market. When can we see a Bitwise fund for that?
I love that idea. I think that's a great idea. And I think it really is, sort of happening and exploding right now. So kudos to you on the idea. The thing about these ideas, which people forget, is, we all know that technologies go through this two-wave motion, right? Where there's a hype cycle and then a crash of despair, and then the slope of enlightenment where they really start going. And that's what I'm seeing in the gaming space. We had the hype cycle. We have the pit of despair. Mm-hmm. But if you look past the surface and look at the numbers, you're seeing real and substantial growth. If you look at the pipeline of games coming into the space, it's very broad, which suggests we're going to have winners. If you think of the performant aspects of the underlying blockchains and the throughput and low cost that's now enabled in them, you can imagine the scale that you're going to get. So I think you're looking at it at the right point. You're like 6 to 12 months ahead of where the market and the media coverage is, because you're starting to see traction, but people are stuck on the old narrative that Web3 gaming was a bust. And that's just not what the data increasingly suggests.
Well, and what we do here, we dive into the tech quite a bit. That's really the background of our channel. And most of it, when you look at what the strategies are taking place in Silicon Valley, whether that's Microsoft, Meta to a certain extent, and even if you take a look at Sony and what they've been able to do in a short period of time, a lot of blockchain involvement. Even here recently, we've had Off the Grid start to launch now on Xbox, one of the first marketplaces that we've seen that actually show an opportunity for Web3 gaming in traditional Web2 outlets, especially around some of these big markets. And if you see what Meta's doing in terms of AR, VR, and XR, it's just a natural evolution that I think is just going to take place. So I think you're right. Mm-hmm. You're in that early stage. It's much like 1996 of the internet era when I was a young engineer working at Microsoft. Mm-hmm. Nobody thought we were going to see, what we saw, of course, in 1999 and then 2000, but it's definitely happening. So much so that you've got this happening right here in Japan, and that is a digital minister of the Japanese government now going head forward to Web3 and kind of the future of where this technology is going. Here's my question to you. Do you think Japan and Asia is just that far ahead of us and they're going to explode in terms of innovation and opportunity, or can the US catch up here?
That's a good question. Look, I never count out the US. Is my general view. We always get around to it eventually and then come and play a significant role. Certainly you're seeing, and the regulatory environment here has pushed things overseas. And you're seeing more excitement in Asia. I know a lot of people came back from the Token 2049 conference, really fired up about the opportunity abroad. You see things like this news on Japan. You see Japan reconsidering taxation on crypto assets.
Right.
You certainly see a lot of Web3 activity over there. But can the US catch up? Of course we can catch up. I think we're close to a sort of sea change in regulatory attitudes towards crypto and Web3 in the US. I think we're going to see that in the coming year or two ahead, almost regardless of what happens in the November election. So could we catch back up? Absolutely. But the beauty as an investor is it almost doesn't matter, right? Crypto is inherently global. The blockchains that underpin it are inherently global. And you can benefit from that activity wherever it takes place around the world. And the history of crypto is sort of a history of different countries squeezing it from a regulatory perspective and the balloon expanding in another geography. I think we've seen some of that with the US versus Asia, which you're referencing, but there's always some place that it goes. There's always a release valve. And,
right.
I think that's sort of the core thing to remember through all this.
Yeah, the market is quite different than it was in the early 2000s when we saw the US pretty much taking control of the birth of the internet and a lot of the e-commerce and commerce that really kind of burgeoned out of that. So it's going to be interesting to see, because this, I think, is the first time we've seen a level playing field globally around technology. And you could use AI in that space as well as blockchain tech and where crypto is going in both those. So I agree with you. I think it's going to be an interesting one for sure. A couple of last questions for you. One, I want to talk a little bit about yield generation. And if you think about yield generation, especially on a fund that would be on chain, similar to what BlackRock has been able to do with Securitize, what's the likelihood of Bitwise doing something like that?
Yes, it's a great question. Without giving away our product roadmap to all my fund competitors out there who I love, I will say that on-chain solutions is something that we're looking at very deeply at Bitwise. You're seeing that market grow in a substantial format, mostly with traditional finance players coming in. We think there is space for more crypto native firms that can bridge those two to fill that role. So short of just telling you exactly what we plan to do, the short answer is yes. I think that market is right at a major growth point, and Bitwise wants to be a player in both traditional financial products and on-chain financial products, and I think you'll see us do some of that in the near future.
Yeah, I mean, it seems like the appetite is there from the investment community, so it just seems like a natural evolution going forward. Last point is legislation, policies. We've kind of sprinkled it through here. We've got a stablecoin bill coming through. We've got the FIT 21 bill potentially in a market structure act coming through. likelihood of those actually going through? I know, do you feel like stablecoin is going to be the number one right now, at least in terms of getting
I think
through?
stablecoin will be number one. Yes. Yeah.
Yeah.
The US is incented to do that, right? Even from a traditional finance perspective, even if you dislike crypto, because it out exports the dollar and helps us sell our debt, which is a win-win. But look, my big picture is that mostly Washington's hostile attitude to crypto has passed its sell-by date. And you can
Hmm.
see this in things like the SEC not repealing SAB 121, but letting Boney move into the custody space. You can see it maybe in the resignation of the director of enforcement at the SEC. You can see it in the bipartisan legislation. You can see it even in the speed of the ETF approval. The logjam is breaking up. I think whatever happens in the November election will be sort of the excuse to turn the page from a hostile approach to a more neutral approach. I'm pretty optimistic about that. I see that in the tea leaves. There's no guarantee that will continue, but that is the trend. Those are real facts, real things that happen that all point in a very positive direction. And I think if we can use the November election as a reason to turn the page, we get a very fundamentally different outlook in the year
Right.
ahead.
Well, listen, if you're in crypto, we always are looking out for these rug pulls. And sometimes I look at something in the legislative front, I think, oh, this is feeling too good right now. I'm worried. You know, it's like the minute you think something's going to happen. Do you feel like either way, whatever way the election falls, that we potentially have an opportunity here?
Yeah, a little Charlie Brown attitude on that. But yeah, I definitely think, look, I do think it's moving in a positive direction. There will be differences and there are things to worry about. In the stablecoin bill, is there a pathway to allow interest accrual on stablecoins? Is it separate just for the big banks, or can smaller players innovate in that space? There is, of course, differences in degree, but I
Hmm.
think it is from, like freezing to decent or
Okay.
freezing to warm. I think that's the question. Is it decent or is it warm? And either way, it's better than what we have today. But there are certainly things to look out for as we move forward.
Yeah, well, we're definitely waiting for the sunny and Miami days then of where this is coming for sure. Matt Hougan, it's been great having you on. Thanks for coming in today. I know you have a very busy schedule with everything you guys have been doing, so we do appreciate the time.
Thanks for having me. This was a lot of fun.
Excellent, excellent. All right, you guys are tuned in maybe on the podcast side of things right now. Make sure and come over here on the YouTube channel. You get all the goodies over here. And of course, one of the things you can do is jump into our Diamond Circle. That's our own private member group. It's where we do additional content, additional analysis, more interviews, all that kind of stuff. We always leave a link down below, so check that out. And of course, you can catch me out there on X at Paul Barron. We'll catch you next time right here on TechPath.